Good morning, and welcome back to another pipeline trading video. Today we're breaking down one of the most important drivers in the market right now, options positioning, and how it's likely going to impact both Bitcoin and Ethereum into this week's major expiry. Right now we're heading into a massive options expiration event, with roughly $13 to $14 billion in notional value set to expire. And when you get positioning of this size, it creates very specific price targets where the market tends to gravitate. This is where the concept of max pain comes in. Max pain is the price level where the majority of options expire worthless. In other words, it's the level that causes the most financial loss for option buyers and the least payout for option sellers. And because market makers and dealers are constantly hedging their exposure, price often gets pulled toward these levels into expiration. Let's start with Bitcoin. Right now, the dominant max pain level sits around the $75,000 mark. That's where the largest concentration of open interest is sitting, particularly on the call side. So what does that mean? It means if Bitcoin is trading below that level, there's a natural upward pull into that zone as dealers hedge and unwind positions. This creates a very important dynamic. Price is not just moving based on technicals, but also because of positioning pressure. So going into expiry, the key level to watch is 75,000. If price continues trending upward, liquidity above recent highs could get taken, and we may see a squeeze into that level. But if price reaches 75,000 and starts to stall, that's where you want to be cautious. That can act as a short-term distribution zone, especially if momentum begins to fade. Now shifting over to Ethereum, Ethereum's max pain is sitting around 2,150, and unlike Bitcoin, ETH is actually trading much closer to its max pain level already. This changes the behavior. Instead of acting like a magnet, price tends to consolidate around this level. That means we're more likely to see choppy, range-bound price action. So the best setups on ETH right now are going to be mean reversion trades, taking advantage of deviations away from that 2,150 level. Now here's the key insight most traders miss. Max pain by itself is not a trading strategy. But when you combine it with liquidity, order blocks, and overall market structure, it becomes a very powerful tool. For example, if you have equal highs sitting just below 75K on Bitcoin, and that aligns with max pain, that creates a high probability liquidity target. That's where you start thinking like smart money. So heading into this expiry, here's the game plan. For Bitcoin, watch for upside pressure towards 75,000. That's your primary magnet level. But be cautious of rejection once price gets there. For Ethereum, expect more range-bound behavior around 2,150, with opportunities on both sides of the range. And as always, don't trade these levels blindly. Wait for confirmation, watch the reaction, and manage risk properly. If you found this helpful and want more breakdowns like this, subscribe and hit the bell icon to stay connected. As always, stay disciplined, trade with intention, and God bless.